Welcome to Forex Trend Atlas. Each weekend, we focus on the big picture, from the quarterly down to the daily charts, using well-known technical tools. Now, let's begin with this week's outlook. Here is the quarterly chart of USDJPY, also known as the 3-month chart. Since 1987, the pair had been in a long-term downtrend. That trend was eventually broken, and after reaching a major high near 161, price has pulled back. I see this as a range phase following the previous downtrend. On this long-term time frame, the key level to watch is around 121.5. The market has lost direction for now, but if price breaks above 161, it would confirm a new long-term uptrend and could lead to a strong bullish phase. Next, let's move to the monthly chart. Here we can draw an ascending channel. Since hitting 161 in July 2024, upward momentum has slowed, but we continue to see buying pressure around the 140 level, where price has bounced several times. The current formation can be viewed as a potential head and shoulders pattern. The shoulders are near 151, the neckline is around 140, and the head sits near 161. If price breaks clearly above 151, a move toward 161 becomes likely. However, if price falls below 140 decisively, we should expect a deeper correction. In that case, the lower boundary of the channel, and the quarterly key level around 121.5, could become the next target zone. Overall, I see mixed activity between buyers and sellers within a broader long-term uptrend. Now, let's look at the weekly chart. Here, we can also draw an ascending trend channel. Recently, price tested the 151 area at the end of July 2025 but failed to break higher. Since then, the pair has been consolidating within the lower half of this channel. Until price breaks clearly above 151, it may be difficult for the market to regain strong bullish momentum. Conversely, if price breaks below the lower channel boundary around 142.5, or the repeatedly tested 140 level, that would suggest the market has abandoned its bullish bias, and new long entries should be avoided. Finally, let's move to the daily chart. Here, we can draw this ascending trend line. Recently, the pair has been trading within a narrow range, between 149 on the upside and 146.5 on the downside. At the end of September, price briefly broke above this range but quickly returned inside it. If the pair breaks upward again, I will treat it as a continuation of the uptrend and look for buying opportunities. However, if price breaks below the range and the trend line together, it would signal a neutral stance in the short term. Combining this with the higher timeframe view, we can interpret the current situation as a correction within a larger long-term uptrend. We need to watch carefully to see whether this remains a correction or develops into a short-term downtrend. In summary, the key levels to watch are 149 on the upside and 146.5 on the downside. A breakout in either direction could define the next phase. As always, let's stay patient and focused, and approach the market with a long-term perspective this week as well. Thank you for watching today's analysis. If you found it helpful, please subscribe and hit the bell for updates. Let's continue to approach the markets with patience and discipline. See you in the next outlook.